So I started this thinking, well, let's do the easy thing. Let's let's talk about definitions. The truth is there is no definition of a social enterprise. There's no uniform definition. It's one of the problems in the sector. I did thought, well, I'll go to the fount of all knowledge, Wikipedia. Can't go wrong with there, surely. They give you quite a useful definition. It talks about commercial strategies to improve human and the environment and the society. It's not a bad one. I'm not going to bore you with the government one, especially there's only a few people here. Clearly So is an organisation which helps social enterprises raise money, so it may be useful to you. And they have this concept of that social enterprise is a business which has social and financial goals, or commercial goals. The one I prefer, and the one if you are thinking in this space, I think is quite a useful guideline, is done by Social Enterprise UK. And if you're not familiar with them, they're a trade body for social enterprises. And you may want to look them up because they've got a lot of useful information. And their attempt to define it is a business that attempts to tackle social problems. The key word here is trade. A social enterprise trades, it earns its money from providing goods or services which has a value. So they make the money from selling goods or services. But what they do is they reinvest those profits into their social purpose. So that's the key to a social enterprise. It's not whether you make money or not, it's what you do with that money. So as the slightly glib statement goes, but when a social enterprise profits, so does society. That's the guiding principle. You might think, well, there's other ways of defining what a social enterprise is. There's legal structure and regulation which sometimes comes into it. And I'm going to mention a few things which you might hear when you go into this space and try and explain a little bit what they mean. So I'll start with a conventional company limited by shares, wants to make money. It's all about the money. There's no social objective. If there is, it's incidental. That's your traditional entrepreneur, if you like. They may want to create jobs and do good things, but ultimately it's a growth thing. You may hear people talking about social purpose companies or ethical companies. Very often these are a company like any other. The only slight difference is that what they do has got some kind of wider objective, so they're focused on a particular social theme. The difficulty, I think, with this is that quite often they have no particular social objectives built into their constitution. So you could argue every pharmaceutical company is a social enterprise, but I think that would be stretching the point. So I call them more ethical than social purpose. You may have come across some organisations which have a social objective which are differently structured. Has anybody heard of a company limited by guarantee? Or anybody work for a company limited by guarantee? It's quite often a structure which social enterprises use. What it is instead of shareholders, get a bit technical, but you have members. So you don't have a shareholder. You're not running a business to create value for shareholders to take out. It's locked in the business. So it's a form of asset lock, really. The economic value stays within the business. Similar concept is industrial and provident societies. You may come across those. If you're interested in community energy, quite often you'll see organisations which are set up as industrial and provident societies or cooperatives. It has some social characteristics. It's one member, one vote, and this kind of commonality. But quite often, you have to bear in mind with those that it's the IPS which are a co-op, a cooperative type. That cooperative means they're actually running for the benefit of those IPS shareholders, so it's not going back into the community. But the good thing is at least they've got some kind of clear social impact built into their constitution, so it's a good indicator to their intentions. You may have, I'm going to cross some terminology now, again you may have come across, but social regulation. So there's such a thing as a community interest company, which is what our company is, FSE Group. We're a community interest company. In itself, a CIC for short, community interest company, that's not a form of legal structure. What it is a form of regulation. So you have to report to your regulator, the regulator of community interest companies, about what social purpose you're achieving, what social outcomes you're achieving. It also has rules around how you can distribute profits out of your company. So if you're going to set up as a community interest company, which can be limited by shares or limited by guarantee, you want to be sure that it's a good sign that your objective is social, because there's no easy way out of that. You can't easily display it or run it purely for shareholder benefit. That social purpose is enshrined in the company forevermore, and there's rules about disposals and all sorts of things. So it's quite a good indicator as to what your real social mission is. Another form of industrial and provident societies is what often gets called BENCOM, or benefit for society or community. So what that is, it's a cooperative society but in its constitution it's established for the benefit not for the members of that society or the owners of the society, but for the community that it serves. So instead of running it for your shareholders, you're running it for a community. So it's another very clear confirmation of your social objective. And of course you can be a registered charity as well, which has lots of regulation and rules around it. Now these three categories quite often get lumped together as the generic term of regulated social enterprise. So if you think you're running a social enterprise, I'm not sure which of these you sit on, or if you're working for a social enterprise. We'd be interested to know whether you still think you are a social enterprise or not. The interesting thing about these categories is that they attract something called social investment tax relief. So one of the issues around the social sector for social entrepreneurs is that they've been unable to raise money in conventional markets before because they can't get EIS relief and SEIS relief. Some of you may be aware of these kind of tax advantages. Well, SITO is designed to overcome that. So these organisations, which have been set up with very good intentions and pure social motivations, can now provide tax relief, quite similar to the EIS scheme, whether they get loan capital or equity capital, because these organisations quite often don't have shares. They can't issue equity, but they can take on loans, and people can get tax relief on the loans they make. So it's a really important category, and we tend to do a lot of our funding in that space. And then, of course, at the end you've got registered charities, but I think everybody's probably quite familiar with the concept of being a charity. So in terms of whether you think you're a social enterprise or whether somebody else thinks you're a social enterprise or whether a funder thinks you're a social enterprise, it's largely going to be dependent on what kind of organisations they're prepared to consider. For FSE and our social funds, you have to be one of these or one of these. Other funds will look at these kind of organisations as well. So you just have to think through who you're dealing with and see if there's a meeting of minds. But be that as may, so we've tried definitions and we've tried regulation, it's still not clear cut. So what I thought I'd do is try and give you a view, and it's a bit of a personal view as to what I think makes a good social enterprise. And I'm talking as a funder, so most funders will apply these kind of categorisations for these kind of tests. And the first one sounds obvious, but you've got to have a clear social motivation. So in other words, why are you in business? Why do you get up in the morning? Why have you set this business up? Why are you trading? And there's normally, the good social enterprises know exactly what problem they're trying to address, who the beneficiary group is, so who they're trying to help, and have a very clear view on what the solution is that they're creating to solve that problem. So if you create the solution, you solve the problem, and the beneficiaries benefit. So your whole ethos for being in business is to help that beneficiary group. That's a good social enterprise. Sometimes called theory of change, but that's getting into jargon. And of course, those social objectives should really be in your constitutional documents so that they're enshrined. So forevermore, that's what, if you're setting yourself up as a social enterprise and you want to keep pure to that social mission, which can be difficult as you grow, stick them in your constitutional documents. The other test that we often apply is, where's the extra mile here? And by that, what I mean is, what do you do as a social enterprise that a pure commercial enterprise in your sector wouldn't do? Because a good example is this is in employment. A lot of employment businesses are trying to get people into work. There's a lot of pure commercial businesses in that sector, and you might think, and they may validly claim to a degree they're a social enterprise. But if they're just picking the easy wins of people that they can get their money in for quickly, I'm not sure that's so social. What would make a social enterprise for me in that sector is those that are reaching out to help the long-term unemployed, those most disadvantaged in the labour market, ex-offenders, homeless, those kind of individuals. So it's what do you do that somebody else wouldn't do? I think that's a good test if you want to think of yourself as a social enterprise and if you want to keep true to your principles. And it goes into inclusivity. How do you get people to access your product or your service? The next one, again, is perhaps slightly obvious, but how do you reinvest those profits, or what are you doing with the profits you make? So it's all about, asset locks of the kind that are in socially regulated businesses are useful. But more than that, it's about an ethos and an intent about what are you doing with the money you make, how are you reinvesting that back in. So there's a lot of social enterprises that do purely commercial activities, but they do them to make a profit, which they can then apply for their charitable purpose. There is one example I'll give you. You might want to look up Hackney Community Transport, or now called HCT Group. It used to be a community transport company, quite small. It's now a 40 million turnover business, and it competes for bus contracts with Aviva and all these kind of big players doing traditional transport contracts, running buses in London, all that kind of stuff. And it's got this, they have a lovely slide. They show red London buses, that's what they do, so that they can run community buses to help And then they have a third slide which shows the people that they're helping, which are like the elderly, those disabled, and all those kind of groups which can't get access to transport. So think through how you apply and what the money you make. And it goes hand in hand to that. To be a true social enterprise, you should be profitable stroke sustainable. For us, there are charities which rely on donations and philanthropic money. That's fine. But for the purposes of, in terms of how we view a social enterprise means you're in business. You're trading, you're providing goods or services. And if you truly want to be sustainable, those goods and services have to sustain you. You have to make a surplus on those, not to whittle it out to shareholders, but to reinvest into your objective. So that's my attempt, if you like, at kind of testing you as to whether you think you really are a social enterprise or the measures that we apply. I won't dwell too much, but this is one business we funded. We're FSE. I didn't want to do a sales thing on FSE, but we're a funding organisation. We provide money into the sector. And this is one organisation we're helping. They provide construction training and apprenticeships, so they run workshops and they run apprenticeship programs to get people into the construction sector. It was started by an individual who had a construction business working in some fairly tough parts of London. And he just saw these multiple generations of unemployment and these people who just couldn't get onto the usual college programs, and he wanted to do something about it. So he set up this business as a community interest company. If you recall, I was talking about regulation earlier, particularly to target those groups. So his extra mile is he just doesn't go for the easy wins. He goes and finds those people furthest from the job market. So they have a very high percentage of homeless people on their progress, or ex-homeless people, hopefully. Quite a lot of ex-offenders, a lot of females who aren't prevalent in that sector, and some of the minority groups as well. So their extra mile is to not do the easy wins. They go and find these people who need a bit more work, and they make sure they get their success rates. They don't give up. They work these people through. They do the difficult stuff, really. Their social investment is that in doing that, they have to employ fewer apprentice officers per apprentice, or the other way around. So in other words, it's more intensive work, so they're incurring costs that a pure organisation wouldn't do, a pure profit organisation wouldn't do. And they've set up as a CIC, so they're asset locked and regulated. Business model is profitable. They get paid for putting these people through construction apprenticeships, through a couple of different funding sources. Don't really need to get into the details of it. But it's a profitable business. Each time they open up a new centre, that centre will make money that contributes towards the central overhead that they're running. But what they're doing is they're reinvesting those profits into more new centres. It takes a long time, and I'll come back to that. So then I thought I'd try and attack what is social investment. A lot of people talk about social investment. What is that? And the point to make firstly, because a lot of people come from this thinking, well, that's grants and all that kind of stuff. But bear in mind, investment means you have to pay your investor back, and they'll expect a risk premium for that money. So I'm going to use this. Big Cider Capital funded two of our funds, so they're one of our biggest stakeholders. And so I thought I'd better use their definition, which is the use of repayable finance, this concept of investment, to achieve a social as well as a financial return. So a true social investor will want both. And they may be forgiving, a lot of them are willing to forgive some financial return for the sake of achieving a social return. And just to break that down, I won't dwell on this too much, but to a bit like the company structures, I'll just break it through so you can understand. Commercial investors or conventional investment, that's all about the money in slightly cynical terms. But the objective is 100% financial. Conventional investors won't have a social barrier to you. You might hear of ethical investment. The difference between social investment and ethical investment is a negative screen. So what you do is you say, we'll find things we don't like and we won't invest in those, but everything else is fair game. That's really ethical investment. So it's better from a social point of view. You're raising your bar higher, but it's really, there's no particular outcomes that you're expecting out of it. You're just avoiding doing bad stuff, if you like. What social investment is about is more of a positive screen. So it's saying, okay, well, we want to help businesses that help unemployment or fuel poverty or whatever it might be. There'll be social themes that people are interested in. So social investment is about finding those organisations and helping them grow and expand their scale of impact. And in doing so, they're going to expect some kind of social return out of that. They'll want their money to do some social good that can be measured in some way. So social investment is about picking what social good you want, and the investees are required, and they should want to anyway, monitor and measure what social impact they're making. I just included grant donation there because it is a form of funding, but you could argue it's all social return, no financial return, and it's not repayable, excluding some schemes which are a bit kind of quirky. So it's a valid form of funding, but it's not really investment. If you want these slides, you can spend longer. If you leave your details, we'll pass these slides and email them out to you, and you can dwell on some of these slides a bit longer. But this was the same case study I was talking to you about and showing the value of social investment. That business I was just talking about, we've put a loan of £300,000 into that business, or about to anyway. It's priced at 10%, so we're getting the financial return. That's our financial return as investors. What it's doing is it's helping them jumpstart their business from about 5 academies that they're running at the moment to 12, it might be 13 on the slide, I'm not sure, to about 12 academies within a space of 3 years. That pace of growth would take probably 10 years without some upfront capital. The organisation doesn't have a balance sheet or assets that you can get conventional money from a bank from, so it hasn't got access to those kind of markets. But we took a view that we would put some capital in there on some fairly friendly terms in terms of repayments. For us, the social return of that is that each centre typically gets 40 people into jobs every 18-month cycle. So if you can have 12 centres doing that rather than 5, there's a huge social impact that comes out of that. And like I say, just to remind, these are people that really wouldn't get on to normal college programmes. This is a real extra mile business. So there's a huge social return out of putting that money in. Our financial return sits alongside. But for the business, that step change, they would never, as I say, it would take them 10 years to do that without this kind of capital. The financial cost for them I don't say it doesn't matter because we always have that debate, but it actually takes their business from quite a small profit to quite a material profit in that space of time. So the financial benefit to them is clear as well. Their financial resilience is transformed through that growth. And all the time they're doubling their impact and tripling their impact. And by getting that resilient and creating those profits, they won't need us next time round because they'll be generating their own profits and they'll be fully sustainable. This is quite a busy slide, but I was trying to pitch this as to give you some information as well so you can take away and reference it. In terms of social investment, what's happening in the market, a large majority of it historically has been secured loans, which is a little bit unimaginative in a way because lots of people can lend against assets. I'll probably get loads of bankers hating me to say it's fairly simple, but it's not. There's quite a lot of people that will do it. But there are some good social banks. These are Charity Bank, Triodos, Unity Trust, Cooperative Bank. These are all organisations that are focusing their money on social enterprises. So if you want to have a meeting of cultures, they're good banks to go to. I mentioned big-sided capital as one of our investors. That bombarding you with jargon. Big-sided capital is all the unclaimed bank balances that sit in the country. There's about 400 million of them. And then a bunch of bailed-out bank money, frankly, 200 million, to create a 600 million capital pot that's being deployed into the social space to help social enterprises and social organisations grow. And it's being channeled through financial intermediaries or fund managers, people like us. So big-sided capital is a huge part of this sector. And what they're doing is they're creating lots of funds, each with their own specific remit to particularly target this sector. So we're one. At the risk of talking about my competition, I've listed a few there, but there are others as well. And at the end of this slide, there's a list of websites. And you can go on the big-sided capital if you're interested in funding or you need funding. And you can list every single fund that they've supported. That's not exclusive because there's some funds that they haven't supported or haven't been involved in. You'll have a good feel and you should look through that and try and pick the organisation that matches your ethos and what you're trying to achieve. But this has opened up a whole form of higher risk capital going into the sector that wasn't there before. So this is when we talk about this being a British means business event, Britain leads the way in this. Britain's been leading the social enterprise and social investment sector. It's quite innovative. If you're a company limited by shares, you can still access traditional equity as well. If you're asset locked, it's a bit more difficult. So there are equity funds that you can attack as well. And as I say, some of these things like the tax breaks, EIS and VCT, they're now becoming available into the social sector and being adapted for the types of legal structures that social enterprises typically take. So there's a lot more going into this sector than there has been 2 years ago. It's a huge growth sector. Alongside that, there's quite a lot so it's no good just put the money out. You need the right support and the right advice. And there's a lot about, but a lot of people don't know it. It's not well signposted, frankly. If you're looking to start or you're in an early stage of setting up a social venture, I'd suggest you look at the big potential funds. which is a fund that's been set up by, it's actually a big lottery fund backed. But it's all about helping organisations get investment ready. So it's, if you're a long way from being ready to apply for funding, it'll help you. There's diagnostic tools, there's mentoring, there's specific programs that they will take you through to help you get ready to raise money. There's social incubators, which is a similar kind of thing, but a bit more hands-on, including premises and networking. You should look those up. There's quite a lot of grant money for early stage ventures as well. You just have to pick your right partner and look for it. And there's some really interesting mentoring organisations being created. Because what you will find, particularly things like community energy, there's a real lack of experience in a lot of social enterprises on how to develop and grow a business, if you like, or an organisation. And there's some quite specific organisations which will help on that front. So that's really the main thing I wanted to say for today. I hope it's been useful. If you're interested, we'll send these slides out to you, and on that slide will be this one. Well, I've tried to pick out some websites which if you want to dig deeper, these will be some good places to go. Big Sided Capital is all about funding. Big Lottery Fund has lots of grant programs. Big Potential is all about that mentoring support and investment readiness. And there's some other interesting organisations where you can get more support as well. I think that's me done. So I hope that's been helpful. I'll happily, anybody wants to challenge any of that or ask any questions, then I'm more than happy to take anything you want to ask. We have, next year, you've picked it up, we have a fund called the Community Generation Fund, which helps community groups develop and construct their own renewable energy projects. If you're interested in that, I'll have a separate conversation with you. Because that's an organisation that needs a lot of support into that sector, and there's other things beyond us that's going on there. So I'll have some good stuff for you. Okay, great. Were you a regulated social enterprise, or were you? Right. Okay. Interesting. Yeah. Okay. Well, like I say, I'm happy to follow up if you. I can leave my card or take the slides, and I can tell you some more. If it's not one of our funds, because we can't help everybody, I'll direct you to the best match. Great. Thank you very much. Anything else? Just come and see me. I'll hang around here for a short while.